right, hey everyone, I'm here with Mike McDougall from Darwin, who I think pretty much everyone knows at this point. But maybe there's a few of you who are new to the industry who don't know that Darwin is one of the core kind of ad networks that is in FinPub. So Mike, thanks for being here.
Thanks for having me, John.
Yeah, so today what we're going to do is I want to kind of get your take on what's working right now. What's the state of kind of acquisition in your network, and kind of what are the things that you see working? Because we know how 2022 has been kind of a rough year for a lot of people, but I know there's a lot of bright spots out there. So let's kind of just dig in and straight up, like, are things working?
Are things working? I mean, they're working remarkably well. It's kind of weird, to be honest with you. So like looking at last year, arguably things were working last year as well. I mean, think about the dynamic of this. It's when things are bad, that's when the retail investor, the retail trader, that's when they actually need guidance the most. Obviously, the guidance has to be good and get them results, and the product needs to work and everything like that. But no one wants to catch a falling knife. So when things were like really, really like uncertain and falling, I know it was a little bit scary. Things were still working right then. Now, the majority of our clients are crushing it. For those of you who have watched the training that I put together, there's a certain, so it's like almost like a category of clients that are sitting out. I actually don't understand it. We were talking about it early. I think it's almost, there's stuff happening behind the scenes that we don't know about. It's none of our business. And that has them, causing the pull, because it's not necessarily their promos aren't working. There's something else in effect there. But I'm seeing the small customers find success, the medium-sized customers find success. And what's interesting is, as long as they're coming in with a realistic expectation that's based on industry averages, and as long as they have the marketing in place that backs into what their objectives are, we're seeing success like right out of the gate. So it's really exciting.
That's awesome. So promos are working. Lead gen, straight to sale. Like what kind of things are you seeing are kind of like the mainstay of what's working right now?
I mean, everything really. There was a pullback in lead generation in Q4, and that really comes down to, do we want to eat later or eat now? So from a cash flow standpoint, everyone's like, we need to just make sure that we're acquiring customers and that we're not intentionally deferring the buy, the sale rather, like multiple months down the line, which some certain lead generation products will do, like the database building, co-regi type stuff. They're great, but you have to know it's a tool. You're not going to try to hammer a nail in with a screwdriver. It is a tool. You have to understand where it fits into it. So both of them work. I will say that I'm spending more time up front managing expectations beforehand. I mean, we always spend a lot of time, but I want to make crystal clear, this tool right here is good for this. So if you're expecting this, don't expect that. This is what we have to define as success. So I would say that those businesses who have reasonable expectations, they understand their own cash flow situation, what they can do and they can't do. We're seeing them knock it out of the park. I'm talking, like, I made a post the other day on LinkedIn. We're seeing like some better results in Q1 of 2022 right now, which is super exciting and refreshing, because I'm a business owner too. I mean, the same fears that everyone else has, the same uncertainties that everyone else has, I have them, my team has them. I'd say the difference is we've been really focused on the individual opportunities that have been in place. Case in point, is now the time to be promoting a product that is touting, tech stocks, referring to early 2022 tech stocks, and then using that superpower and combining it with your marketing message to reinforce why this is so powerful? That very well may fall flat. But for anything that's about trading volatility, so anything like options, futures, where the results are actually there, people want to see results, and our advertisers are getting them, and they're getting them for the customers. So it's pretty fantastic, actually.
No, that's great. That's I think like the uncertainty in the market is like the killer. That's what, like, if the market goes up or if it goes down, that's great from a promotional standpoint, because you know what you can do. What you can talk about is that like uncertain period that is like, that sucks. but the fact that, like you're saying, like everyone's seeing results and that things are working, I mean, I think that speaks to a lot of things right now. And the other point you had about like tech stocks and message changing, I mean, it's one of my soapboxes that, like, I feel like we tend to let copywriters write whatever they're going to write, and it can be disassociated from where the market actually is at. And like, there's this disconnect of copywriters not really being into the business enough to understand where the editors or traders' views on the market are, and then they can't take that and put that into promo, and so you have like a message problem that makes it feel like you have a recession in your business too, because you just got the wrong, like, you're talking about the wrong thing. You can't talk about cannabis stocks right now the way that you could, 4 years ago. You can't talk about tech stocks and after the math, like, or Bitcoin, right? Like, it has seasons, based on the market. And so like I think that a lot of the pain that people feel sometimes, like there's market pain for sure, but then it's exacerbated by messaging pain, creative risk that basically is disconnected from where the market is, and then not being able to turn your messaging based on the fact that the market has changed and people are looking for it's different. So
and you end up, the problem is you end up seeming tone deaf, out of touch, and then you're asking them to buy a $100, $500, $2,000 product. It's like they're talking about stuff that, stuff in this industry, it just turns on a dime. And I actually go into this in the training, like you say, like they'll write copy, they're disconnected from it, and then the results start to flounder. And then they throw the promo out. They might just need to cut the first 10 minutes and redo that with a new lead and the corresponding emails or whatever the ads are leading up to it, to just erase that one component, instead of, like, as long as the product is still good, it's still sound for these market conditions. You can do a lot just by some Control-Alt-Delete of a certain section. But yes, perfect congruency with market conditions is absolutely important. And on that point, like, when we're in this like 9-year, 10-year, 11-year bull rally, it's not just the marketing messages that have to, that kind of like clump together and like they work until they don't, but it's also the marketing processes. So for example, if you were for the last 10 years doing the standard ascension model, low dollar front end offer, get them into some sort of recurring, get them into a medium ticket, lifetime of the low dollar, then get them into the $2,000, they get them to the $5,000 access or whatever. It's almost an intentional drag out of the process. On one hand, it's a really effective way to use the media. So you're able to have a leading indicator that is usually, as long as market conditions don't change, should, like clockwork, like basically, what's the word? Appreciate, just like real estate. So if you acquire a customer for $150, should be worth $300 in 4 months or 4.5, 5 months or something like that. That transaction is now done. And again, it's a leading indicator where you don't have to wait that 4 to 5 months to figure out what actually happens. So you're going to get a lot more customers and you're going to have a lot more mature over time. It's a great process. Problem is, when market conditions change, which they have, business conditions have changed dramatically, to use that same strategy, maybe it works. And if it does, don't stop doing it. But if it doesn't, it's not just the message that you have to take a look at, it's also the process. So the entire marketing process has to be looked at. It's probably 70% of the entire thing, the process. Everyone looks at the messaging and the product, but the actual process that you're bringing through is the biggest component of this entire thing. Case in point. So everyone takes that ascension model literally. Well, guess what? That's based on certain business conditions, a certain amount of cash in your account, a certain amount of projected revenue that's going to be coming down the line. Well, when all of that changes, your overhead's still really expensive, revenues are down, their products aren't doing as well, conversion rates are down, and so on and so forth. If you're now using this loss leader approach, you might never get to break even. You just be the way that it is. So what do? Do you do nothing? One of the things that I'm seeing my clients do that I've actually been asking them to do this for years, and a lot of them are just like, yeah, well, we'll get to it. Because on one hand, it's perceived as risky. And I suppose if you do it one way, it is risky. But going direct to big ticket, sure, everyone knows go to a webinar, bring them into a $2,000 product or whatever. But going direct to big ticket on a video sales letter, doing all the things right leading up to it and all the things right after it, if you're doing database building, is absolutely crushing it right now. We have clients right now that are doing, we have multiple clients right now that are at close to 200% intra-month ROI, hard offer style to a $2,000-ish product. So it works. It's just a matter of doing everything exactly right. And it really deconstructs that whole concept that you have to ascend them.
Mm-hmm. So you have, let's go through some of these like models just in terms of processes to make it clear. You have a straight lead gen model where someone's just trying to buy the lead, and then they're going to try and, have a sequence behind it that's going to promote some various things, often of a front end, or it can be a back end. Then you have straight to promo, like I'm gonna drive straight to a VSL, to some kind of a webinar pitch. And then you have that webinar pitch then could be a lower price loss leader to try and go in, like the concept on that, just from a marketing standpoint, is, look, I'm going to lower the price, try and get as many buyers in as I can, go for the total scale, and then I will ascend them through. And so within that, there's a few different models. There's like the old tripwire thing where I'm going to give a $7 offer, and then I'm going to upsell from there. And then there's like kind of the traditional newsletter model of like, I'm going to do a $39 to $99 product, and then I'm going to have $1,000 to $2,000 price back ends. And then you're saying there's also, and I know this, like I used to do this years ago, but straight to $2,000 product. So maybe lead gen straight to $2,000 product, or just straight to a promo. And all of those can work. And right now you're saying that you're seeing a lot of people doing that last one that are working.
Yes. Yeah. And everything, and really everything in between. And also another one that's missed out is direct to telesale, or if not direct to telesale,
inbound.
Right, inbound, but also utilizing telesales as support where they're falling off in different areas, like the two-step checkout, or someone's abandoning your sales page. You ask them why they're leaving, give them a compelling offer, get their information, and then that's another lead, so on and so forth. So yeah, a combination of all of those. And SMS is becoming an effective way of communicating with non-buyers that were almost buyers as well. So there's all these different ways that you can do it, and they all do work. But what it comes down to in this period of time, and we might be out of this period of time before we know it, by the way. I mean, if we have a couple more months like this, where clients who used to only spend, 10 grand a month or up to 30, 40, $50,000 a month, like we'll, at least in my world, we'll officially be out of the mud, but I think that the emphasis, at least that I've been talking about, and I know a lot of like the savvier businesses have been doing, has been moving the revenue forward, which has a lot to do with just cash flow. So bottom line is, if you can make 200%, if you can spend $1 and make $2, basically you get your dollar back, and then you have $1 in profit. Well, that could mean a bunch of different things. If that happens immediately, that's one scenario. If that happens in 30 days, that's another. If it happens in 6 months, that's another. If it happens in 12 months, most businesses that are listening right now would go out of business if they're like, let's keep putting 10, 20, 30 grand a month up front, and we should have double that in 12 months trailing. It's not something that smaller, even medium-sized businesses can really sustain for that period of time. And there's a lot of risk associated with that. So to the extent, for everyone listening, to the extent that you could start testing things right now where you're moving revenue forward, the best way to do that is, let's lead with your big ticket. Let's see, and sure, you can get them into a webinar, but just think about this before you do the webinar thing. So if you're sending people to a webinar opt-in page, an average opt-in rate is going to be like 20%, 25%. Why? People know that this is a mode of sales delivery. So they're going to get, this is in 2008, they know they're going to get pitched. They have to also have the time and desire and be able to pay attention for that period of time. And at the end, they know that they're going to get pitched. Cool. So not only are you going to have like a 20, maybe a 30% opt-in rate. I'm seeing more like 20 these days, which means your cost per lead is going to be like $25 to $30 often if it's a like good traffic source. Your attendance rate is going to be like 30%. So now you spend a lot more for the lead. Well, you have the lead, and you're getting them to the webinar, which is a proven process, and about 30% of them are going to attend. But just think about all the fall off that happens there. and how it's
Right.
like almost so you can go big ticket direct to video sales letter. You could also, with my company as well as other companies, utilize click to opt-in going in front, and even the old fashioned just opt-in page. You could do a simple, ridiculously simple selling the benefit, enter your headline, strong headline about the benefit of the video, enter your email if you don't have click to opt-in, and then right over to the video sales letter. And at least then you could have all the follow-up emails bringing you back.
Yeah, and just as like kind of the conceptual way that I think about this is it's friction, right? You have, so the reason that you would normally have a webinar, like in the early days it worked so well, and it still works, but like not as well as it did, like you said, 2008. You have this huge drop off every time you have a step that somebody has to take. You have a drop off, and so if I click, if I have to opt in, I'm going to have a percentage drop off. If I have to add 2 fields, I'm going to have a percentage to opt in. Every step that the customer or prospect has to take is an extra step of friction. And so there's a big drop off from, I want this webinar, I'm going to opt in, which, there's already a drop off just to do that. And then from there to, hey, I'm going to actually show up on the webinar, is a huge drop off. But for every step of friction, you have a higher level of interest and commitment, so that that the people who show up on the webinar are really interested in that topic, which is great. But you're also losing people along the way. And so what that commitment level does sometimes is, I feel like it's a way to mitigate creative risk for people who can't sell too well. Sometimes at this point, where, you know what I mean? Like that's not to slam everybody's good at different things, but it's like, okay, well, if I know that if I can get like 100 people on this webinar, like I'm going to do a pretty good job, because that's 100 really committed people for a back end sale, right? So I can do that. But if I have a good sales message and I can go straight to opt into the promo or click to the promo, like I can get more people in, because more people are going to see that message. I can sell that way. I don't have to do this longer kind of pre-sell that you do in kind of the warm up lead up to the webinars and things like that. And you still have the lead, so you can still post sell them. You can still keep pushing them back to the promo. You can still keep going to it. So you're reducing the friction up front to get to the initial sale, because you just want the most people to see the damn promo right now.
Right. 100%. I think there's a lot to what you just said. That's exactly right. So strategy. So if you fit into that, if you're listening, you fit into that category, something that you should do. So if you got a webinar and it's working, and you're say it's a $2,000 product and you're converting at 5% on the webinar, right? And that works. Go to speechpad.com, spend $75, have it transcribed. It'll get sent back to you in 24 hours in a Word doc. Send that over to your copywriter. Tell them, cut it in half, get rid of all the ums and the uhs. You have all the slide decks. Go on Fiverr, find someone who does just basic video design, get a voiceover. Now you have a script, voiceover, video sales that are brought down to like 20, 30 minutes or something like that you could fully edit. You now have a video sales there, right? So you already did the work. If you have a working webinar, you could easily change that for like under $500 into a high performing video sales letter in like inside of a week. So now what does that do? So we're talking about, we're having a 25% opt-in rate. So if you send 100 people, that means 25 people opted in. Now you have a 30% attendance rate. I can't even do that. So that would be like eight people that are actually on there. Obviously, you have to get more. Or you could send all 100 people to the sales message and get them engaged right there. And on top of it, if you have the lead, which could be done, like I said before, via click to opt-in or otherwise, that becomes your initial shot at it. So where does the webinar fit in? The webinar now should go. So most people are going to be webinar averse. Most people are not going to want to say, sure, let's spend the next 45 minutes to an hour and a half together, and I know you're going to sell me at the end. Everyone else is in it because they're interested in whatever that next step is. Everything from leading up to the video, and then if the video is done well, you're constantly giving them next steps and selling them on continuing to watch. So if you get 100 people to go through that process and see your offer, you should for sure get much better results. Then you come back, then you market the webinar to the non-buyers, and you get those people who like that mode.
Right. So I think of this too, like as when times are really good, like the pandemic, once the pandemic got going, everyone started buying everything. You could be really sloppy in your process and still make a lot of money. And I think what this sounds like to me is like, is you have to be better. And so that idea of friction, like, look, someone goes into promo, like you get the lead, you go straight to the promo. Like we knew this from like just buying cold traffic and working on campaigns. Like if you don't get the promo on the thank you page, you from a like display ads, and you're gonna lose like 30% of the customers right there. Like you can get their opt-in, you can promote to them. But the thing that people forget is kind of what you're saying is like, I can show you a promo right now and still, once I have your email address, I can still get people on a webinar. And so the frame from a copy standpoint that I've always had is a kind of an old school, like direct response, like junkie coming up from direct mail even, is like the reason we have everything that we do in long copy, everything we do in direct response is really about getting fence sitters of various segments. There are some people who they see your offer, they get it, I love this, I'm gonna buy it. That's a very small segment. Then you have, like, you've sold the attention, you've got people's attention. There's a group of people who are like, well, I'm interested in this, but I don't know. And so they're paying attention. That's your opportunity, is those people. And so what you're doing is you want to grab as many people as you can right out of the gate with all your long copy things, and you get a bunch of fence sitters there. But there are still people who are like, I'm kind of interested, I don't know. And so you've got the lead now, so you can send emails, which by themselves can do other things besides simply just sell the click, which is, I think, a mistake a lot of people make, is like they think that their email is, once you have the lead, the email can actually do part of this, the selling, because you have a conversation. And so you can start to bring promo points up into it to continue to sell the click into whatever promo or webinar you have. But you can follow up and do all these other things that you know you're good at. And it's really just having like multiple shots on goal. Once you get that lead in, you got to have multiple shots on goal for the product that they have, for additional products, and actually just getting very, very disciplined about promoting to that list and doing it in multiple ways once you get them in, rather than just like, I did a webinar, oh, that sucked, or right, it did okay. Like you have to squeeze the money out of the list, or else you're going to leave a lot of the juice in the lemon.
Right, exactly. And then another way of looking at that is, why didn't they buy? Right. So there's you could probably sit down, if you are the creator of the product, you're the marketer of the product, you probably know the top 3, 5, 10 reasons why someone wouldn't buy. So once you get them onto your list, and this is another reason to go along with, I think, the point that we're sort of winging as we speak here, is that for those people who are just like used to doing it just this one way, they get them into the webinar, there's a lot of waste. It does work. Well, if it does work with that waste, imagine if that waste wasn't there. We just talked about a really bootstrap strategy for like getting the fence sitters off the fence right up front, video sales letter, big ticket, and then basically webinar and other modes of communication are going to be mid-funnel, and also managing their objections. So why wouldn't someone buy? Wrong time, don't have enough money, don't believe it's going to work for them, don't believe, they don't trust you, they don't know you, they don't like you. So all of these things can be done for really inexpensively once they're in your database. And if you look at each marketing piece or each internal marketing campaign as dedicated to overcoming one or more objections, then you're going to really maximize that entire campaign. But up front, you should be able to, if your product is good and your marketing is on point, it's just math. If you have a $2,000 product and you know what your cost per click is going to be, and you know it's targeted traffic, and you can get about a 0.5% conversion rate onto that, you do the math. I'd have to create a spreadsheet, but so that's it. You know what your cost per click is, you know it's targeted, you know it's a $2,000 product or something close to that. What percentage do you need to convert at to be at break even? And then is that realistic? If it's 3%, 4%, no, it's not on the video sales letter, most likely, right? It's going to be more like 0.5%, a third, 0.33% up to like maybe 1%. That would be amazing. That'd be really amazing, quite frankly. So, right. Anyway, I think we covered that part.
So, I mean, that's basically it, is that you have like one, like there's great news in that promos are working. 2, like we know, like, okay, they're working. You got to get your process kind of improvement. You think about your process and just don't just assume that like whatever you have, like as you've run it for the last 2 years is going to work. Like actually take a fresh look at your process and say, do I need to, where can I tweak and improve this? And I guess the other thing is I guess the question of messaging, like what's the messaging right now that seems to be working?
I mean, greed is crushing it in our network. It almost always does, because it's the way that we bring leads in. And I don't know, I'm sure if you were to go to maybe a conservative list right now, that wouldn't be the case. But in our network, it's almost 100% greed. That doesn't mean that we're swinging and missing when it's fear. It's just, first off, I think we've provided a lot of guidance to our clients. And even if it is a fear piece, we've taught them how to actually convert it into a greed piece without making it feel like a disconnect. Actually, I'll tell you what that is. So if you have a fear piece, if you have a fear-based video sales letter, scary headline, dumpster fire in the background and everything like that, and you go and you look at like the transcript associated with your video sales letter, read down until you get to the opportunity, which if it's this long is going to be it's going to be right about down here. Find out what that opportunity is. Then what you do is you're able to, if you suspect that you're either in a greed market, but you have a fear promo, or you're going to a network like mine, what you're able to do is take the fear copy you had and give yourself the first sentence and a sentence or two sentences to scare them, and then immediately show them the solution to the fear, which is the greed component that's pulled from the transcript. Now it'll be perfectly congruent. They'll know that there's something to be worried about. They won't feel out of place when they get to the video sales letter. And they also don't have to wait 30 minutes to feel like it's in line with what they actually believe is happening right now. You know, we have surveys that go out on our newsletters. And so we get a constant stream of data back from our subscribers. One of the questions we ask is, do you believe you could make money in these market conditions right now? 90% of the respondents are saying yes. So there you go. That explains that, at least in my network. If it's okay, do you have a little bit more time? I want to back up to something.
Yeah. No, absolutely.
All right. So you had said like you have to look at the process. That's true. You actually have to go upstream from that and look at what the process, what that machine is, what goal is that machine made to build. And then you have to go upstream from that, because what upstream from that is what's your cash flow scenario. So it's one thing for you to go out and learn different marketing strategies that a company that's sitting on $100 million in cash is able to pull off. And it's another thing to be like, look, we're month to month. We know that we need to grow our business. What do we actually do? So first and foremost is what is actually possible for you to do, right? So can you afford to be investing $5,000 and never make it back? Can you afford to invest $5,000 as long as you make it back in 90 days, and so on and so forth? So you have to figure out what category you fit in. And, you know, back when I started selling advertising, I was walking into these local businesses like hair salons and like brand new pizza restaurants where they put their life savings in. They know how to make it a pizza, but they don't know how to market the business or anything like that. They had no money. And I'd go in and sell them this little ad and they'd be like, this has to work. And that's why I ended up leaving that business. But like this 16th of a page ad for $131, it has to work. And like, you don't want to be in that situation. But if you find yourself in that situation where the amount that you know that you have to invest, because if you don't invest at all, you're toast. You can't just do that forever. You can do some affiliate stuff, but even if that hasn't dried up, that's going to dry up. You have to be able to put yourself into that category. And that's actually the problem you need to solve first. Do you need to have a line of credit that you can responsibly use and test stuff with, so it's not going into your cash flow? Do you need to start using a credit card for a little? I'm not trying to do some, hey, you know, do any of this stuff for me. I'm just talking you, if you're listening right now, what category do you fit in? If you have no capital, before you start and investing anything's going to hurt you, you have to solve that problem before you do anything else. If you have some capital, you then have to say, what's the minimum expectation that I would have for this capital? How far out can I go before it's like, okay, this is ineffective and I can't afford it? Maybe it's 90 days, maybe it's 60 days. Whatever it is, write that down, because that's now the category that you're in. If you're in the situation where it has to be, I have to make the money back intra-month, I have to be at least break even, then often a lot of the strategies that we're working the last 10 years where you're slowly ascending them, you're going to have to turn those on their head. You're going to have to take your marketing and retool it so that it's designed. You're looking at that. Okay, I have a $2,000 back end. I needed to convert at 0.33% on this cost and traffic to get to break even or profitability. And then that's what you actually have to be focusing on, and get that one thing working and get that one thing scaling, and then build upon that. Does that make sense?
Totally. Yeah, absolutely.
Yeah. So,
yeah. And just to go back to one of your points from before on the messaging, that element of like on a fear promo where you need to have like the greed right in there, like that's just solid copy. I worked with, I came up and was mentored by the late Fate Makepeace. That was my original teacher in copy, and he's like the king of the fear promo. And one of the things he always drilled in my head was like, the fear has to be tied at the hip with the opportunity. And if one of the common mistakes that people have in fear markets or fear promos is it's like, oh my God, you just depressed me for 2 pages and I'm just gonna close this. I want to go home. Like, I'm done. You can't do that. Like, a fear promo is really just like, I'm gonna acknowledge this fear. I'm gonna hold it up and say, this fear is gonna crush these people, but everyone who knows what the hell's going on is about to make a huge opportunity. And that's a good fear promo. So it's still an opportunity promo, still a greed promo.
Yes, exactly. And I think you're right. And I didn't really necessarily think about it like that before, but I would say that is something. Look, I guess if it works, it isn't wrong. But if it doesn't work, it's easy to say, well, that was wrong. And I think a lot of times the dragging them through the coals for 45 minutes until you show them what the opportunity is, you're probably going to get some real diehard, far right wing people who are going to be buying into that. But then it's going to be at the exclusion of probably 80% of everybody else.
But even like End of America, which is like the biggest fear promo we've, still like in the deck and everything, it's like still talked about the opportunity. So I think like, it's good copy, and is, a fear promo. People hear fear, and this is true of like junior copywriters when they start to, write stuff, is that like, oh, it's a fear promo. I'm gonna put the scariest stuff out there. And it's like, that's not how it works. It's still an opportunity promo.
Right. And it's only, let's pretend that everything was 100% exactly right and there was no marketing thought put into it. The only reason it worked is because the thing that you're scaring them is only there. It's like a bump set spike, so that the thing that you're selling them is a solution to the fear. So a lot of times that 2-step is unnecessary, at least in our network, and other networks as well, because you could just go right to the greed component. It doesn't have to like scare them. And to your point, I think this is really actually important. I think a lot of people who are listening should like write this down, that if you have fear copy, you should be aware of at what point are you showing the opportunity. Because I agree, it should be like what they call it in journalism, upside down pyramid. It's like, car accident kills a bunch of people on I-95 and they back it, on Sunday evening, they back it out. So I think it's like, you could scare them and then you immediately need to be like, but it's okay because of this, but you should also be scared, but also, there's this opportunity, but we'll get to that in a little bit.
Right. It's kind of like if you want to take it outside of finance, if you were going to say like some catastrophic promise or prediction, like Russia is going to nuke America. And then you would say, so there's this huge fear that the fear is about an attention grabbing thing. And then you take that attention and you turn it on to an opportunity. And the opportunity is these 15 states are the safest states in America. Okay, I got to read that now because I got to make sure that I'm living or can get to one of the states, and why is my state, right? So it's like terrifying fear grabs attention, directs it to opportunity. And there should be then, like, I think Mark Ford had this great line about a great promo has an inevitable conclusion. And so like the inevitable conclusion of that is you don't want to be in the other states, you want to be in one of those states. Right. And so like a great promo has that kind of like element right up at the front, where like I remember like there was the ignore China, lose money is my favorite example of that, where it's like the conclusion of the promo is in the headline, right? Like invest in China, like that was it. And so yeah, so like on the messaging standpoint, I think that's an important thing to note right now. But yeah.
that'd be a great, you know, if you were like selling timeshares in Belize or something like that, like Russia will be nuking America in T minus.
Yeah.
So the other thing I'll tell you that I'm seeing is, and it just kind of, it also makes sense because even those businesses that are doing the low dollar front end offers, those typically aren't going to be, you know, substantial hands-on trading related services. Those are typically the back end, higher frequency, more hand holding, higher level of customer service, managed portfolios, trade alerts, and all so on and so forth. So in line with moving everything forward, the thing that's being moved forward is often things related to, as you would imagine, trading options, anything with volatility, you know, some futures. Futures is still a very narrow niche, but we have clients with futures products that are seeing success with it. Even Forex, we're seeing making a comeback for sure. So trading the short term, it's basically tactical. And I think that, you know, as business owners, if you're a business owner, you know, you should be operating based on a strategy, but really focusing tactically right now. You know, you need to be micromanaging the data, not to the point where you're pulling stuff too soon, but you know, focusing on your 10-year plan right now is kind of silly. You need to be like, all right, January, and then January, February, March. And then that's, I think, how investors and traders are thinking right now as well. It's like, or I guess the complete opposite. I was on a call with a good friend of mine yesterday, and I was like, a lot of people nervous right now. A lot of investors is like, why? I mean, he's a very wealthy, very, very wealthy, from very, very wealthy family, raised, you know, all about investing and stuff like that. He's like, wow, this doesn't bother me at all. He's like, it's just gonna, you know, no one's gonna remember this in a year, 2 years or whatever. I'm just gonna keep, you know, investing and so on and so forth. So I guess that's maybe the rarity. Everyone else who's seeing their portfolio fluctuate by 30 or 40% or more, they're freaking out, and they have to focus tactically. So I think a lot of those services that are focused on trade alerts, trading, as opposed to longer term, you know, picking the right stock, I think those are appealing right now. And again, it comes back to, if those are back ends before, get the numbers worked out, moving forward.
Yeah, no, that makes sense. I think that's, so like when I go back to what was working in 08, 09, a couple of things came up. One was selling kind of like consistency actually was working a little bit better, because everyone's like, I just want to know that I can win. That was one thing. And then another thing that I thought about was how back then, like the most active trading part of the market really picked up fast, much faster than the rest of the market, because like, and I think it's a mindset issue for like, if you have there's a concept of locus of control. Like some people think like, my life basically goes how the rest of the outside world and outside influences kind of are the primary driver of what makes my life good or bad. You know, is my country being invaded by Russia? Is the economy like completely tanked? And then there's another, like the internal locus of control is like, look, like I don't care what's happening outside. My success depends entirely on my efforts. And in reality, there's a combination of those factors, but like we all skew one way or the other. And when I think of our prospects and our customers, the more passive the investor is, the more the locus of control is external, and the more active he is, the more that locus of control is internal. So like a day trader is like, I can make money in any fucking market. Like his locus of control on success of his trading is himself. And so when the market is bad, the problem for that guy is not, oh, the market is bad. The problem for that guy is, shit, I don't know how to trade this market. It's my fault. And so he's going to invest more faster because he wants to figure out how to trade this market right now. Yeah. And so that part of the market, I feel like when things are bad, you just talk about what the state of the market is, and you talk about what actually is going to work right now in this market. And that guy's ready to buy because he's like, if I don't know, I need to figure it out. That other group comes on, like I think of them as like the promos, like the end of the America promos that came in 2010 after the big crash. Right. So it took them a while. Everyone was like on the fence. And so like the more passive somebody is as an investor, the longer he sits on the fence. And so like thinking about like who your promos are targeting right now is probably, you know, important more so than at other times.
Perfectly in alignment. I didn't think I learned about that in psychology class in college, the internal locus of control and external. And I immediately aligned with internal, like I'm in control of X, Y, and Z. And so I looked at friends, family, business arrangements through that filter for years. And it's interesting that you just said that, because typically the external locus of control people are more like they're coming from your Lucky Charms and they think that things happen to them.
Yes.
And because of that, you know, they are afraid, they live in fear. And then you get to some of these pockets of lists, like some of the conservative lists, where it's a lot of things that are just happening to them, conspiracies that are happening against their will. You know, they're just a puppet, or they're amongst puppets. So that whole, it's very much in line with what we were talking about. And certainly those would be like the longer term newsletter stock buyers that want the single stock that they're not in and out of, as opposed to someone who's in control of their own destiny. I think that's a really good parallel, John.
Yeah, thanks. And I think it's very relevant for all of us in the industry right now and thinking about promo, is that, like, you know, if you have an external locus of control on your business, it's like, oh, well, the market sucks. And it's like, well, everybody's sucking. So they kind of like absolves you of the responsibility of figuring out how to make sure your promos don't suck.
Right.
But the reality is especially now, like, people are converting, things are working. Yes. And if you're not, then there's a reason that you're not. You either haven't looked at, you haven't thought about, or your messaging and product is disconnected from their market. Is like, there is an element of this that it's on you to figure out. It's kind of like, and I feel bad saying this, but like, there are some people who I'm like, you've been in the business a very long time, and the COVID years weren't your best years ever. That's a problem. Okay, right. That's a problem, not because that was the best market we've seen. Like, this is the best market we've seen as an industry. And if you didn't have some significant growth, you may have given back that growth. But if you didn't during that period, like, dramatically have like, holy crap, like, things are going, there's a problem with your business. And that problem is not market external related. The problem is internal. It has to do with how you're running it.
It is, and it comes a lot down to, like, are you someone who learns and observes and then can emulate and then can get it right? Or are you someone who can innovate? You have to have someone on your team. If it's not you, someone needs to be able to say, what about this? How about that? Let's try this. In order for them to do that, they have to be a bit non-conformist, and they also have to understand what the overall objective is. And, you know, I'll have to dig in really hard with certain business owners or media buyers to find out what it is that they actually really want, and they might not even know that. But yeah, I mean, it's an interesting concept.
Yeah, and so to that point, I guess, so you're because of the nature of your business, you're kind of you're in a sense, you're like me. You sit in the middle, and you see all kinds of stuff from all kinds of businesses. You see promos from everybody. You see what's working. You see what and what doesn't work, and you've seen it over a very long period of time. And from that experience, you've recently put together a series of training videos that are free to everybody.
Yes.
Could you kind of walk through just overview of kind of what's the purpose of that and what you kind of put in there, so that I'm going to link to it underneath this video for everybody, because I think that for anyone who is struggling or is trying to figure out like what's working for other people, what could I be doing differently, like, it's a really great resource that I went through with, and I want to make sure that we put it out there. So you can kind of just walk through that real quick.
Absolutely, appreciate it. Yeah, I kind of did that on the fly. It was a response to all the meetings that I go on. There's only so many meetings I could go on. And there are some real recurring themes that I felt like everyone needed to know, so that they could chill out, understand that things aren't going to remain, if they are struggling, they're not going to remain like that, and things that they could do right now to move the needle, right? So some of the things that we touched on today. First and foremost, one of the main topics, I'd say the basis of it all, is congruency. So I go into that quite a bit. It is like a huge killer of promotions, and it has a lot to do with one hand not knowing what the other hand is doing. So someone has a product, and someone's responsible for creating the product. Someone else is responsible for all the operations of pulling it all together, right? And then maybe there's a marketer, maybe it's a copywriter who isn't responsible for the whole thing, and everyone's working in basically these silos. And as a result, it becomes like kind of fragmented and disjointed, And instead of things flowing from a nice, easy step 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, all the way down to them actually buying, you're just asking for people to abandon ship at every single click, like friction, like we were talking about before. So one of the things that we talk about in there is how to solve that, how to identify that problem, how to solve it. Upstream from that, I go into like a state of the market in December, and it's still applicable right now. You'll see a quick historical tour over the last 100 years of economic downturns, what types of businesses grew, which ones shrunk and why, what your peers are doing. I go over, I have a module called fear, or to scare or not to scare, talking about the difference between should we scare them right now or not. And it's not going to be as cut and dry as you might think from listening to this. There's nothing to buy. It's not like a sales webinar or anything like that. Give some ideas on increasing revenue right now, and also reducing refunds, because everyone focuses on generating more revenue, and it's almost comical. You know, we generated $1 million and then you're given 400,000 back or whatever it is over whatever period of time, and it can be business crushing. And a lot of business owners run their business as if it's an ATM and they're just, or a checking account, right? And all of a sudden they run into a cash issue because they have a refund issue, but they do nothing to solve the refund issue. So I have a whole module on that. So I think you all will like it. Like John said, it's kind of a long URL to read. So maybe we'll do an overlay here, or just drop it below. But yeah, you don't have to opt in or anything. Hopefully you like it.
Yeah, awesome. Yeah,
I will ask if you get some good results from it, shoot me an email and let me know. So make me feel like I did something good.
There we go.
Yeah.
Cool.
I know you want to wrap up. I wanted to say one thing though, back from before, when we were talking about like the uses of these different tools. Back in literature class in college, they talked about the ability to suspend your disbelief. So when you're reading a story or you're watching a movie or something like that, and you know that, you know, they're flying through the air, and you just accept it, even though a bike can't actually, like, you just accept these things and you're into it. And then there's a term of like basically being thrown out, right? So of being thrown out of a story, you're no longer engaged anymore. So when you're thinking about like webinars and what you should do, anything that's low ticket, do not bring them into a webinar to sell something low ticket. It doesn't make sense, because you're going to have all that friction. Anything medium ticket, do your best to sell that via video sales letter. And the reason is because of all that friction. But there's another reason. From the $300 to $500 price point, I believe that there's a mental barrier where once you exceed that $500 price point, they're no longer willing to suspend their disbelief that they're not being lied to or manipulated in some way. And what do I mean by that? Everyone's got these perpetual webinars. You bring them in, you kind of pretend like they're real, even though they're not. And then so that right there, if you think about it, you're trying to get $2,000 from someone, and you're doing the horse and pony show as if this is live, answering questions, countdowns. I mean, yes, we've all done it. I used to do it back, you know, decade ago. But there you lose. That's why a live webinar will convert at whatever 5, 6, 7, 8%, and then you get them into a perpetual webinar, maybe it's down to 3%, because they don't believe you, and they need to believe you at that price level. So I would say, rule of thumb for all of you who are like trying to sell a $300 to $500 medium ticket product, if you're able to do that on a webinar, use the strategy I was talking about earlier. Send it over to speechpad.com, I believe is what it is. Get the transcript, get a video sales letter, send it over to your copywriter, cut it down, video sales letter, figure out the numbers that you need to be at, and then your marketing needs to be working towards that. So low ticket, medium ticket, 300, 500, all that for sure should be outside of a webinar. It's fine to do the webinar it's hard to find do the big ticket in the webinar, but if it's working there, also do that strategy and try to turn it on its head. And instead of having a fraction of people see your offer, front load it, turn it into video sales letter, try to get a 0.5% conversion rate, try to get ROI positive on day 0 with it. If that works and you're able to do some lead gen component, follow up with the webinar later.
Nice. Awesome.
That's what I have to say.
Killer. Great. Well, I appreciate this, Mike. This is great.
Absolutely.
Love talking to you. I know we can go on for quite a while, because we can just both kind of go nuts on diving into all this.
I know it.
But no, this is great, and I'll put that link below this to everybody. And try and do this more often. Try and do like a kind of review of what's working out there for everybody.
Yeah, I'm always happy to do it. You know, it's good for the industry. So
yeah, killer. All right, man.
All right.
Take care.
Thanks, John. Thanks for having me. All right, take care.
Bye.
Bye.